Why I lost 20 prop farm challenges. I lost not 1, not 5, but 20 prop farm challenges. That's right, 20 prop farms accounts, gone. And the worst part, most of them were lost for the same stupid reasons. Today, I'm breaking down exactly what went wrong, so you don't have to make the same mistakes. Reason 1. Overconfidence. Overconfidence is a silent killer in trading. It's a mindset that can creep in when you're on a winning streak, making you feel invincible and above the market's volatility. You start to believe that your past successes guarantee future wins, and that you can outsmart the market at every turn. This attitude leads to recklessness, as you begin to take bigger risks and ignore the rules that once guided your trading decisions. When you're overconfident, you start to disregard the very principles that helped you achieve initial successes. You might begin to trade more frequently, take larger positions, or venture into unfamiliar markets without proper analysis. Your mindset shifts from, "I'm a disciplined trader," to, "I am a master of the market." But the market doesn't care about your ego or your past wins. It's indifferent to your feelings and opinions, and it will humble you quickly if you let your guard down. The market's indifference can be brutal. One wrong move, one misjudged trade, can wipe out your gains and leave you feeling shocked and demoralized. This is exactly what happened to me. I thought I had cracked the code, but the market had other plans. It taught me a harsh lesson: stay humble. Just because you've passed a challenge or achieved some success in trading doesn't mean you've mastered it. The market is constantly evolving, and you need to evolve with it. Staying humble means recognizing that there's always more to learn and that the market can surprise you at any time. It means sticking to your rules, managing your risks, and being prepared for unexpected outcomes. By staying grounded and disciplined, you can avoid the pitfalls of overconfidence and continue to grow as a trader. Remember, the market is a tough teacher, but it will teach you valuable lessons if you're willing to listen and adapt. Ignoring risk management was a critical mistake that cost me dearly in my attempts to pass prop farm challenges. I would often take on excessive risk, thinking that one big win would solve all my problems. I'd risk 2%, even 4% per trade, convinced that the potential reward was worth the gamble. But trading doesn't work that way. It's not about hitting a home run every time. It's about consistent, calculated decision-making. Prop farms have strict rules, including drawdown limits, that traders must adhere to. These rules are in place to protect the farm's capital, and violating them can result in account termination. When I ignored risk management and took on too much risk, I would often blow up my account in a single bad trade. One bad day with oversized risk was all it took for me to be shut out of the competition. There were no second chances, no opportunities to rectify my mistakes. In hindsight, I realized that consistency is far more important than greed-driven risk-taking. When trading prop farms, it's crucial to prioritize risk management and adhere to strict position sizing rules. Never risking more than 1 to 2% per trade is a golden rule that can help you survive the inevitable ups and downs of trading. By doing so, you'll be able to stay in the game longer, learn from your mistakes, and gradually build your skills and confidence. The lesson I learned is that consistency beats greed every time. It's better to focus on making steady, incremental gains than to try to hit a jackpot with one massive trade. By prioritizing risk management and adopting a disciplined approach, I was able to improve my trading performance and increase my chances of success in prop farm challenges. This experience taught me the importance of patience, discipline, and prudent risk-taking in the pursuit of trading excellence. Switching strategies too often was another major pitfall that hindered my progress as a trader. I would jump from one approach to another, never giving myself enough time to truly master any single strategy. One day, I'd be scalping, focusing on quick, small gains, and the next, I'd switch swing trading, holding positions for days or even weeks. I'd add new indicators to my charts every week, convinced that the latest tool would give me an edge. But this constant switching meant I lacked consistency in my trading approach. The problem with constantly changing strategies is that you never truly master one. Trading requires experience and repetition to develop a deep understanding of how a particular strategy works. When you keep switching, you're always starting from scratch, trying to learn new rules, new indicators, and new market behaviors. This lack of consistency led to second guessing in my trades. I'd question my decisions, wondering if I was using the right strategy or indicator, and this uncertainty would paralyze me, causing me to make mistakes and lose accounts. As a trader, it's essential to stick to one proven strategy and master it before making significant changes. This means committing to a particular approach, whether it's scalping, swing trading, or another method, and giving it time to work. By focusing on one strategy, you can develop a deeper understanding of its strengths and weaknesses, learn to anticipate market movements, and refine your skills. Mastering a strategy takes time, patience, and discipline, but it's the key to becoming a consistently profitable trader. By sticking to one strategy, you'll be able to build confidence in your trading decisions and avoid the pitfalls of second guessing. You'll learn to trust your analysis and trust the process, which is critical for long-term success in trading. When you finally do decide to tweak or adjust your strategy, it will be based on a deep understanding of what works and what doesn't, rather than a desperate attempt to find a new solution. Consistency and patience are key to trading success, and mastering one strategy is the foundation upon which all other improvements are built. Trading out of bottom was another critical error I made in my trading journey. On slow market days, I'd find myself feeling restless, eager to take action and do something. Instead of waiting for high-probability trade setups, I'd force trades, convincing myself that I needed to be active to be successful. But this approach was fundamentally flawed. Trading requires patience and discipline, not impulsive actions driven by boredom or a desire for activity. Revenge trading after a loss was one of the most destructive habits I developed as a trader. When I'd lose a trade, I'd let my emotions get the better of me, feeling a strong urge to get back at the market. I'd immediately jump back in with double the position size, convinced that I could recoup my losses quickly. This approach was fundamentally flawed, and it led to some of the most significant losses of my trading career. I'd tell myself, I'll make it back fast, but in reality, I was setting myself up for even greater losses. The problem with revenge trading is that it's driven by emotions rather than logic. When you're trying to get revenge on the market, you're no longer making rational trading decisions. You're reacting impulsively, trying to prove a point or recoup losses, rather than following your trading plan. This approach is a recipe for disaster, and it's a guaranteed way to blow your account. I learned this the hard way, blowing 5 accounts in a single week due to my inability to manage my emotions after losses. The market doesn't owe you anything. Losses are an inevitable part of trading, and trying to force a win is a futile endeavor. Revenge trading is a death sentence for your trading account, as it leads to impulsive decisions, excessive risk-taking, and ultimately, significant losses. It's essential to accept that losses are part of the game and that trying to get back at the market is not a viable strategy. After a loss, it's crucial to work away and reset your mindset before trading again. This allows you to clear your head, regroup, and come back to the markets with a level head. By taking a break and reassessing your approach, you can avoid the pitfalls of revenge trading and make more rational, informed decisions. Remember, trading is a marathon, not a sprint. It's about making consistent, profitable decisions over the long term. It's about trying to win back losses in a single trade. Not following prop farm rules was a critical mistake that cost me daily. Each prop farm has its own set of rules, including maximum daily loss limits, minimum trading days, and lot size limits. These rules are in place to ensure that traders operate within a defined risk framework and maintain a level of discipline in their trading. However, I often ignored these rules, thinking that I could generate more profit and that the farm wouldn't mind. I was wrong. Prop farms have zero tolerance for rule breakers. They take breaches of their rules very seriously, and if you don't follow their terms, they will shut you down. I learned this the hard way, as my failure to adhere to the rules resulted in account termination. It's essential to understand that prop farms are not there to corner traders or provide second chances. They are businesses that expect traders to operate within the boundaries they've set, and failure to comply can have serious consequences. Reading and following the rules strictly is crucial to success in prop trading. Before starting to trade, it's essential to thoroughly understand the farm's requirements and guidelines. This includes knowing the maximum daily loss limit, the minimum number of trading days required, and any restrictions on lot sizes. By following these rules, traders can avoid unnecessary risks and ensure that they remain compliant with the farm's terms. To avoid account termination, it's vital to take the time to read and understand the prop farm's rules. Don't assume that you can figure it out as you go or that the rules don't apply to you. Instead, take a disciplined approach to trading, adhering strictly to the farm's guidelines. By doing so, you can build a successful trading career and avoid the pitfalls that come with rule breaking. Losing 20 accounts was painful, but it forced me to fix my mistakes. Now, I trade with discipline, patience, and strict risk management. If I can bounce back, so can you, but you have to learn from losses and not repeat them. Have you ever blown a prop farm account? What was your biggest mistake? Let me know in the comments. Like and subscribe for more trading truths.